If you've been doing the cheat sheet, you can see that there's been a lot of discontinuous movements inside the markets. And we saw in the past 24 hours that Bitcoin and the entire crypto market got a bit smashed. But since this cheat sheet was done, it's recovered slightly, which is kind of nice. This is going to be a really important video. We're going to look through Apple, Tesla, Nvidia. We're going to look through the S&P 500, the Nasdaq, the Dow, the Russell. We're also going to look at Bitcoin and Ethereum, all of these from a structural perspective. By the end of the video, you'll be able to answer the question, do you think the major indices, the S&P 500, the Nasdaq, the Russell, and the Dow, are they about to break down and take the entire stock market and, of course, crypto with it? Or are we going to see something else? That is, a bounce that catches everybody by surprise. I'm also going to share how you can tell if structure is failing or passing and what that actually means. And much, much more. Let's run the numbers. I'd like to give a shout out to the CTKS ambassadors. The CTKS ambassadors are just a wonderful group of people. Please reach out and just let them know that you're there and you've got instant friendships just in the making. I'm also very grateful that you've joined us today. We've got a lot of important things to talk about. If you've been doing the cheat sheet, you already know that the markets are a little bit wobbly. They're going out of synchronization. We have a rule 225, Bitcoin cannot escape the stock market's gravity. At the moment, the markets are coming down in the crypto space, but they're going up inside the stock market. What's even more strange is in the past 24 hours, Rule 45 got somewhat broken. No alt can escape Bitcoin's gravity. Of course, Bitcoin came down and the alts came down, but Bitcoin came down a lot more than a lot of other alts came down, and that's really unusual. With probabilities, we need to answer the question, what is Bitcoin trying to tell us at the current time? Is it set to break down or is it set to rebound? And if it starts to break down, is this more a retracement inside the main markets just being felt by Bitcoin first, or is it something else? Masterclass students, please refer to LV19. There's some important information in that lesson that you should look at now. One thing to bear in mind, as you look at this specific chart, you can see Russia's market and China's market has been quite weak, and Russia's market is weakening further. China is starting to flatten out. When you look at the Russell 2000, you can see there's a bit of a cut over in process. If we start to make our way up, that could be very good for markets. When we look at Australia's market, that is also quite healthy. The Dow Jones is a little bit overextended, and you can see Germany's market is coming down at the current time. Taiwan, with the semiconductor craze just born from artificial intelligence, is going nuts. And Japan's market is looking reasonably healthy. There's a number of crossovers here that place the health of the sub-markets, the markets ancillary to the US markets, as being reasonably healthy. But you can see the Nasdaq and the S&P 500 as well as the Dow are a little bit overextended. Now, why is this important? That's a very good question to answer. The reason it's important is because of Rule 217. No stock market, that means no market outside the US can escape the US stock market's gravity. This is a really important rule. What we're seeing across the board are the US indices may be in the process of pulling back, but the rest of the markets are looking pretty good. How do we tell how significant this actually is? There are a number of classes inside the masterclass that are particularly good to look at. LV13 is one of them. Also, it's a good idea to look at LV19 and LV20. You'll also find LV29 inflation and recession charts is really quite helpful. What we typically see across major indices is that they tend to decay downwards in advance of the US indices. We're not seeing this at the current time. In fact, we're seeing something quite opposite. The other non-US indices are actually doing quite well. But if the US starts to retrace, you can bet your bottom dollar that there will be some negative price momentum on other major indices. But typically what we find is that indices outside the US indices tend to decay first, and that's what's got us a little bit worried about what Bitcoin is doing, because Bitcoin is a very risky asset class, and the risk is commensurate with the return. In other words, if you have a high risk, you're going to get a pretty high return, and that is Bitcoin and crypto. Looking at the chart from TM6 can also help you out. We've seen the VIX start to increase, but Bitcoin, this blue line, has been selling down for quite some time. We've seen oil doing rather well, and the major indices not doing too badly. But notice this, the major indice, in other words, the NASDAQ here, is starting to make its way down. And that could have a lot to do with what's been happening recently with NVIDIA. We'll look at that in a minute. Also, typically, if you're going to get a market crash signal, it would be yields just plummeting. They'll plummet, they'll literally fall off the edge of a cliff. We're not seeing that at the current time. Typically, when the yields fall off, you will get a spike in the DXY, as this is a flight to a safe haven. People just basically cash out and they put their money in US dollars, waiting for the dip to sort itself out. As the DXY goes up, typically gold is hit from a negative dimension, and if the yields come down, eventually gold will turn around, so that's something to just bear in mind. But if there is a crash, it doesn't mean that gold will necessarily rally, because you'll get this big flight into safety. If you've been doing the cheat sheet, you know that the fear and greed index for the stock market is pretty woeful. And even though we're breaking out to all-time new highs, people are really scared at the moment, and that's been pushing the US dollar currency index, or the DXY or Dixie, up. If you're enjoying the content so far, please smash that like button. I'd be so grateful and appreciative. And please let me know, what do you think is going to happen to the main markets? Do you think the main markets are going to retrace, or do you think they're going to bounce and to rally? And if you have any other questions that you would like me to answer, please let me know inside the comments. I'd love to do so. A major problem that people always face: where is the true structural resistance and true structural support levels inside the market? A lot of people just use their intuition on where those particular levels might be. And intuition is not statistically significant, so it's very hard to rely on. Instead, we use Level 1 and Level 2 standard certification from the CTKS method, which is the world's most powerful smart money buy and sell level detection system. When we apply that to Bitcoin, we can see this 61,398 level is a structural resistance level, and we've so far failed to get across that. We haven't made a higher high here and a reconfirmation. Instead, we came down into that 61,129 mark, and we reconfirmed it as a underside retest, and we've moved back to the 60,659 level. The fortunate thing is that there are a few more structural support levels inside the market around this particular level. But if we start to drop off, and I'll just explain how failures and passes work. For example, as we come down, even though we can get a big deep sell-off, it will just mean that we need more and more structural levels to support that rebound in price. When we get a pass-through of these structural levels, they act as magnets and trampolines, as Biddy loves to say, and it's very true as well. You'll get a movement up and away from these lines, but if it doesn't reconfirm when it gets above a structural level, it's failing. And if it fails continuously, it's just going to move down and down and down until it can pass again. I'll give you a better view on Ethereum, and then we'll look at the major indices. When we look at Ethereum, it's been trading in excess of 3,000 days. We can see at that 3486 structural resistance level, we had a fail. Now, how is it a fail right there? Because it didn't even get up to the structural resistance level and just reconfirm it. It didn't make it. And if this occurs, that's not a good sign. And you can see there was another fail at that 3450 mark. So it came down into the 3420 mark, and it was trying to get up, but it kept on failing, making a series of lower highs, and then it failed again. If you get a failure, it's moving down to the next structural level to either reconfirm it or slice down through it. And this is something just to bear in mind. When you're reading the CTKS charts, what it's all about is for you to just be aware where something passes and where something fails. And if you get a big push down through a negative CTKS gap, which is like a air turbulence pocket where you can just drop 10,000 feet in a second, you're going to need some fairly strong support levels. And support levels mean that buyers are going to come in and defend these lines. And you can see that 3221 on ETH was really well defended. What happened? It got pushed back to the 3301 mark. Now, what do we see here? A couple of passes, but then, unfortunately, a series of lower highs and a failure. And then it got magnetized back into this 3301. Now, what caused this? It was the decay in the DXY. It's so important to understand how all the different charts intercorrelate and interconnect. I'm just going to zoom in here to give you a better perspective. The reason that we look at structural levels, we must understand if structure is being confirmed as support or it's failing as support, and therefore putting lower levels of structural support as the magnet. Price charts are not actually that complex. What you see is price moving in a wave-based function, always going up and down, up and down. But the philosophy is very simple. If you get above a structural level of support, you're heading to structural resistance above that price. And if you can't break through it, you're moving down to the structural support level below. It's pretty much that simple. And these levels of support and structural resistance are the most accurate that you can ever place across a chart, and they're done with 2 levels of standard certification. Now let's have a look at the major indices because they're really important right now. With Bitcoin and Ethereum, I pop the levels through the indicator on, but we're going to pop them off for the S&P 500. What people traditionally do, if they see something like this and they witness negative price action, they think it's going to fall through the floor, just go to zero, because they don't know where the structure is. Now let's turn on the structure and see what's cooking. Having structural levels around times like this is vitally important. You can see what's happened with the S&P 500. It got over a level of structural resistance and it was just consolidating in this particular 53.44 level, and then it sparked up. It did a huge jump up to a structural resistance level around that 54.40 mark. Now, where was the next major structural level? It was just under 55.10, but it couldn't get up there. It couldn't confirm it as support. What is it doing now? It's coming back to that 54.400 or 54.40 mark. Now, if it does an underside retest, you can see that the levels at which the S&P 500 can be caught are around that 53.54 and 53.34 mark, just in between here. It's not a fresh air gap down to oblivion, far from it. You can see the difference between looking at a chart with and without structural levels. If you don't know where the structure is, you don't know where the safety nets are. If you don't know where the safety nets and where the ceilings are, you're in a deep amount of trouble. Now let's look at the NASDAQ. Turning to the NASDAQ, we can see the NASDAQ's up and down price actions, but we can't see structure on this. We absolutely need to look at where the structure is, and you can simply mark up your chart with the standards, or you can grab the indicator from the service. But let's just pop it on right now. What's really apparent to us right now is that we got through a level of fairly strong structural resistance and was in the process of turning that into support around this 17,505 level. Now what happened? We can see a structural support level in here. And if it gets broken through, if it fails, it's going to move down into structure. Now, this is a forward leading indicator of price. What these levels are magnetized levels. I'll just show you the levels below in a minute, but I just want you to understand, if we can't pass above, we're going to the levels below. If we can't pass above, we're going to the levels below. If we can't pass above, we're going to the levels below. You can see how simple it is. It takes all the stress away from trading and investing. We would expect this area of price to be magnetized, but we need to do a little bit more digging into seeing how magnetized it will be. And the key to that is to look at NVIDIA's price chart, because that will give us a great degree of confirmation, because it's so big. Now, what do we see? If we do an underside retest, we could be moving down to that 17,363 mark. You can see how vitally important it is to know where your actual true statistically significant structure is. And when we talk about CTKS structure, what we're saying is all of price history. It's not RIP structure, which is just recent indicative price. And RIP does exactly that to your money. If you look at a chart without structure, it's very difficult to understand what it's actually doing. And when we look at the Dow Jones Industrial Average, that's more than 46,000 days worth of data. Let's throw on the structural levels. You can see the price is not random. It gets up to a level of structural resistance and it takes a while to break through. If you've got a positive CTKS gap, price can move up really quickly to fill that gap. But if it doesn't confirm the next level of structural resistance as structural support, it's coming down to the one below. You always want to look at negativity and positivity inside the market. This long tail rejection right here is showing that the sellers are just hanging out above that 39,520 mark. They're pushing price down. But the seller's not going to have too much of a good time around the 39,170 mark. You can imagine if you didn't know where the structure was, you'd probably be exiting the market now, just running, screaming from the markets. The Russell 2000 is also incredibly important to look at. This is like the small cap health index of the stock market in the US, and it's more than 13,000 days worth of data. Let's pop on the indicators so that we can tell where the structure is and especially how strong it is. Location and strength are very important things to look at when you're looking at structural resistance and structural support levels. You can see down here around that 2012 area, there's a bulletproof level of structural support. That's actually what's held up the Russell 2000 relatively well, is all of this structural support. But what happened when it just reached just a little above that 2036 mark? It couldn't confirm as support. It couldn't just keep on going. And there was just a lighter level of structural resistance just there that it couldn't confirm as support. So that was a fail. That was a fail. This is a fail. This is a fail. This potentially means that we're moving down to the 2012 area. But fortunately, there's a few pit stops along the way. There's a few structural levels inside this chart. Now, it's time to look at NVIDIA. When looking at NVIDIA's price, you could assume that this is just going to fall through the floor. After all, it's gone up and it's retraced back to where just below, well, just a little bit below where it was quite a few weeks ago. But again, where is the structure? That means that let's just pop on the indicator to tell. When you have the indicator, everything makes so much sense. You can see down here, there's so much structural support around that 118 mark. This level of strong buying. You can see how the buyers just came in and said, nope, you're not going down. You're not going down. And where was the next major level of structural resistance? Right up at that 138 mark. Did we get a pass or a fail? We got a shocking fail because it just broke through it like a knife through butter. What about these lower levels? Yes, again, just broke through it. But where is it right now? It's in an area of very strong structural support. Often this happens when you get a big blow off from a very good level of structural support. It can go up and then decay very quickly. This is just the nature of charts. Many people just look at a chart and say, meh, I don't really care about the chart. The chart is not going to tell me anything. After all, when is its annual report coming out? Well, as a person trained classically in finance, I can tell you that the charts tell you the truth, and annual reports, by their very nature, they're always delayed and backwards looking. But smart money always makes its move, but it makes its move around structural levels. So what do we anticipate right now? We can see in pre-market trading, NVIDIA is already down. It's just below that structure. One of the things that you've got to realize, structure is not a brick wall. You can go through it and then be rebounded. But the structural laws are always the same. If you cannot confirm a pass, you've failed and going down to the next levels. Many people want absolute certainty where price is going. I can tell you with absolute certainty, it's moving between structural support and structural resistance and culminations of structural support. We would expect magnetism down in this area for NVIDIA. And a lot of people will be very, very bearish on NVIDIA and may be going short, and we could get a short squeeze out of this. Remember, inside financial markets, price is always moving in a wave. If we come underneath this area and we start to reconfirm all of this structural resistance as resistance and we start to resume down, the next level of structure is about 112 and 50 and then 111. But these are relatively light. So we're going to have to be very adroit, very aware of what's happening inside the markets right now. To gauge market health, another incredibly important chart is Apple's chart. Apple has been around in excess of 15,500 days. When we look at this specific chart, we can see that Apple has been coming down. But why? Where is the structure? So let's pop it on. We can see something that's actually really, really good. When we look at Apple, we've seen that Apple got into this very solid structural support area around that 207 mark, and it bounced up to this structural resistance, but it failed here. What does that mean? It's going back. But this is still fairly significant structural support underneath here, and it's not cut through it, and underside retested it and resumed down. As of yet. This is quite a good sign. If we think about NVIDIA, that's looking pretty good. If we think about Apple, that's looking pretty good as well. And what do we notice right here? This is the problem around that 215 mark for Apple. Apple, this green line, this is the positive 30-day price projection for an upper hit. And we got it. That was satisfied. Inside all of these indicators, you will find an upper boundary, a consolidation, and a lower boundary. And some of these upper and lower boundaries have already been hit on different charts. But the most important thing that you will see is this structure. When you know that there's very heavy structure playing out, that's where you're likely to get a mass of parties. For example, if it's support, which means price is above it, these become very important levels. Now, if they cut through, they're going to just move to the accumulation area below. But if they start to do passes, they're going to move up. And typically when you get these strong levels, you can get consolidation periods. So just be aware of that. A lot of people say, Ken, I have no idea. Why does something shoot up? And why does something consolidate? And why does it stop at a specific area? All of these questions are answered by the CTKS method. It is literally the world's most powerful smart money buy and sell level detection system. It's awesome. Every single chart has its own personality, and when we look at Tesla, where is the structure playing out on it? Okay, let's pop on the indicator. We can see that Elon had a bit of a migraine at 189. We just rejected that structural resistance with an air gap, and then we failed, all the way down to this structural level just a little bit above 181. Tesla's been trying to get back to the 189 mark, but the sellers are just particularly strong at the moment. Unfortunately, Tesla, which has been trading for nearly 5,000 days, doesn't have the kind of support that Apple and Nvidia have. What we see is around that 173 mark to 174, we've got structural support inside the market. And because there's not that much strong structure in between, we could definitely see one of these wicks getting down into this area in the next 24 hours if the markets start to come down. But we would also assume that we'll start to hover around here if we hit. We've actually looked at a tremendous amount of detail to determine if the S&P 500, the Dow, and the Russell are weakening. If they're weakening, what does that mean? It means that Bitcoin and crypto could sell off more. If that's the case, we really need to pay a lot of attention. But we can see when it comes to these major indices, things don't look as bad. And when we look under the hood of especially Apple and Tesla's a little bit weak at the current time. But, however, Nvidia is actually looking really good, and Microsoft doesn't look that bad either. And if you've got the indicators, just pop it on and have a look at Microsoft. If you've made it this far, you're absolutely awesome. And could you please leave a comment, something to do with awesome, so I know that you made it this far. I've also released inside the service the updated CTKS method cheat sheet. These are all the Tier 1, Tier 2, and Tier 3 charts just on one page. It's just really good to remember the reason that you do the cheat sheet is each particular chart, Tier 1, Tier 2, and Tier 3, are like blocks of jigsaw puzzle pieces. When you put them all together, you're paid if you can solve the current puzzle inside financial markets, and you'll need all three tiers to do so. If you can't solve the puzzle, you'll end up paying the markets in terms of losses. But always remember, your gain is never another person's loss, and vice versa. Why is that? Because the markets just pull money together. They just pull money in from traders, investors, pension funds, banks, governments, people going long at spot, people going short, derivatives, options traders, so many people. You can't ever think that every single other market participant, and there are millions of them, they all have your idea of when to buy and when to sell. That's just not the case. Therefore, our real focus is that we either win or learn from our losses. It's just that simple, and the cheat sheet is a great way to win. Inside the service, I've actually released an update to how to read the cheat sheet. One of the things to just always recognize is the financial markets are the ultimate business. You've already got the buyers and sellers right there. Financial markets do nothing more than pull funds together. You're paid if you can solve the puzzle, and you can only realistically solve the puzzle if you know what the puzzle pieces are. What are the keys to getting paid? Well, it's all about your knowledge, analysis, and skill, but it's also about your emotional control. With AI and robotics coming for our jobs, it's really important to manage your money as effectively as you can. Learning how to make and keep money is essential, not just for yourself and the ones you love, but intergenerationally. What are the other keys to success? Well, combining investing and trading and emotional mastery is what it's all about. And to do that, you will require hard work, dedication, and commitment. You already know this is the case. If you don't put in the hard work, you don't get out the results. It's really not fair, but that's the way the world works. And please be very, very careful about using leverage. Using leverage absolutely increases your gains, but it can wipe you out. Just this particular tweet from Twitter today said, Mia, I lost it all, 12 million, my whole net worth gone forever. Or gone forever. Why? Because this particular person just leveraged. This is the unfortunate thing. When you look at the markets are always moving structurally. If the markets don't move in a structure that suits your narrative or suits your story, you just have to embrace reality. I really feel for this person. It's just a terrible thing. When you lose money, you just lose a lot of confidence in the process. But if you just understand that it's a rule that you needed to follow, well, that's a different way, and people can always rebuild. If you would like something in the cheat sheet, please just reach out to me at ctksmethod@gmail.com and I'll help you out. Just recently, someone reached out and said, Ken, can you put open interest for Bitcoin and Ethereum in there? And I said, absolutely. We're seeing a lot of disconnection in markets, but when we look structurally, we also see some good news, especially with Apple, especially with Nvidia, and Microsoft is not too bad at all. But unfortunately, Tesla is not quite looking that good. MicroStrategy is looking a little better, but again, not that good either. There's a lot of things to keep your eyes and ears and everything else open to. But just understand, the markets are typically hit by economic events, and those economic events are interpreted. Fortunately, we've had a couple of FOMC speakers just doing their business so they can go away now. Depending on when you do your cheat sheet, you could have very different results to the ones I have because this was done earlier on. The main key is to understand how things are moving. We had a mass of long liquidations in the past 24 hours. We also saw open interest for Bitcoin and Ethereum going down, and there is a max pain today of $62,000. Also, the Bitcoin ETFs, they've been a bit naughty. Look at all those outflow day after day after day after day after day after day after day. This has got to turn around sooner or later, just on average. The fact that Nvidia came down 6.7% on Monday was not the best thing. But you also know that Nvidia has got reasonably good, strong structural support below it. It's not bulletproof, but it is pretty damn good. And oil did a naughty thing. It actually broke out. It had a melt up. Don't forget, the implication of oil melting up is that the Fed may just keep rates higher for longer. Oil is by definition inflationary. That's a problem. But these things won't play out in a heartbeat. They will take some time. We're also seeing a decrease in US liquidity at the current time. What's really funny is that Google Trends had a big jump in interest in Bitcoin globally. But the Google Trend numbers are very hard to follow. They change literally every day, and I mean back into the past. They're revised like the CPI data. It's really problematic. If you go into the service, into the recent video where I talked about how to read the cheat sheet, all of this is in there for you. And it's available from 1 hour onwards. So that means if you've already watched the video, just scrub it to 1 hour and then just play it from there. In red days like this, just always remember that your learning is your earning. If you put in the hard work, you'll get the results, especially if you do it with integrity. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.